that is what liquidity is all about. Liquidity is not equal highs, equal lows, or relative equal highs or relative equal lows. There is nothing, absolutely nothing relative in the market. Okay, if I have this, and then this, what does this mean? Some people will say, oh, that's relative equal highs. Am I correct? And they will be looking for a trade here. But me, what I see here is different. What I see here, excuse me. So what I see here is liquidity sitting here, and this liquidity taken, liquidity sitting here. That's all. So I believe price can actually take out this liquidity here, mitigate this tiny thing here, and then drop. Maybe do something like this. I will sell this guy while you are still looking at relative equal highs. You need to understand. You need to understand how the liquidity works in the market. It has nothing to do with relative. It has nothing to do with order flow. And the concept of order flow, objective way of looking at order flow, falls in equilibrium pricing actually. But then we quickly chip that into. I didn't even teach the other guys, not group A, not group B rather. I'm talking about the guys who left the October group earlier. I didn't teach them anything about the equilibrium pricing thing. I'm just teaching it now to you guys, and then I taught it to group B yesterday. Is it clear?
Yeah.
Good. Good. So when you look at the market, every time you want to pick a trade, you have just 4 questions at the back of your head. The first question you're going to ask yourself is, where is the next EPA? You identify it, then you ask yourself, where is the next inducement liquidity? You identify it, then you ask yourself, where is the next structural liquidity? Then you identify it, then you ask yourself, where is the next transactional liquidity? Now, all your trades must come from only these 4 levels. And those 4 levels, preferably look for them on the higher time frame. So when you look for them, for example, on the 1-hour time frame, then you also look for them again on the 5-minute time frame. Having an idea, pay close attention. Having an idea of what it looks like on the 1-hour time frame, for example, let me use blue to indicate my 1 hour in an uptrend. Let's say I have this guy and then I have this guy. So now, if I look closely at this, my next inducement liquidity is where? Here. Am I correct, everybody?
Yeah. Yeah.
Yeah.
Right? Transactional liquidity has been what's taken, isn't it?
Yes, it is.
Yes.
My next efficiency starts from where? Here also. So right now, what am I expecting? I'm expecting possible correction, right?
Yes.
And my next structural liquidity is where? Is here.
Yeah.
These are all the levels I'm interested in targeting for my higher time frame. Okay, these are all the levels I'm interested in targeting for my higher time frame. Now, there are also the levels I'm interested in picking trades for my higher time frame. Liquidity for entry, liquidity for exit. Now, at this point here, I know liquidity has been taken, correction is expected. The next thing I'm going to do is I'm going to jump into my lower time frame, and then I look for how I can jump into this trade. So now my lower time frame, for example, the 5 minutes looks like this. I ask myself on this lower time frame, where is the next liquidity? Transactional liquidity has been taken. Inducement liquidity is here. Structural liquidity is here. Then I look closely, and then price is currently delivering bullish. I have no reason to jump into the buy because I don't want to be messed up with the 1 minute. So I wait patiently to this level, and I ask myself, is this efficient? And the answer is no. So I'm still waiting. Then fortunately, price grabs this liquidity, and then I was able to catch a sell here directly based on my 1 minute. Do you guys see that?
Yeah.
Now, if I catch this trade, where is my target? My target is what? The next liquidity level on the 1 hour, and also the next efficiency on the 1 hour that was initially identified. Then price goes and drops. And I'm excited about it. I took partial because H1 is now efficient. Then price comes back here. My 5 minutes, is it efficient or not?
Yes. Yeah.
Yes.
Can I sell?
Yeah. No.
Yes, I can sell because it's efficient.
Sell.
But will I sell?
MSU.
No, I need an MSU for me to sell. And then price continues here, and then price does something like this. Now, will I sell?
Yes. Yeah.
Then I sell this 5 minutes level using the 1 minute MSU, and it continues again like that. Now it taps here, I begin to watch closely for a buy. You see that? Then price goes there, I'm still watching, goes here, I'm still watching, goes up, I'm still watching. Then boom, price taps here. Do I have an MSU into this inducement or not?
Yes. Yeah.
Yes.
Then I buy my 1 hour liquidity based off the 5 minutes. And where do I target next now, everybody? The next 1 hour liquidity levels, which is where and where? The next liquidity level is the last high before the main high. Then we have here, since we are considering this as an uptrend, as the next transactional liquidity. You see that, everybody?
Yeah.
Now, if price continues, for price to continue higher, I'm also going to keep looking at the way this cycle is downward. That's the way I'm going to keep looking at it again to see if I would catch a buy opportunity and more buy opportunities till price goes higher. Can you see how the higher time frame is the entire guide for everything that you deliver on the lower time frame now?
Yes.
Yeah.
Interesting, right? I hope it is making sense too.
Yeah. Sorry, bro.
Yes.
Just one question.
Please ask.
Don't zoom out, bro. Sorry for me.
Yeah, I'm not zooming out. I just want to.
Can I annotate, bro? Can I annotate?
Yeah, you can. Wait, hold on.
Okay.
Yeah, you can annotate now.
So when you took out the 1 hour structural, transaction liquidity, right?
Yeah.
You took out this, right? And then M5 did this, right? On the purple one. If you see the, because it made lower low, right? Lower high, and then lower low. Then you have the structural liquidity like there, right? If in here gives 1 minute, you will take it? No. Okay.
No. If price comes into this structural liquidity here, is there structural liquidity there? Yes, there is. Okay. If price comes to this structural liquidity here and it's showing sign to reject, will I sell that, everybody? What was the rule? Never sell structural liquidity directly, right?
Yeah.
So the first question I ask myself is this even efficient for me to consider this structural liquidity as a trade? Do you understand? Now it is not efficient. Okay, but price tapped into the structural liquidity and it's rejecting. For me to be able to sell this, do I need an MSU or not?
Yeah.
Yeah, I need an MSU for me to sell this. But even if I have an MSU here, I still wouldn't sell this. Why? Because it is not yet efficient.
So you need a new low.
I need a new low to confirm the efficiency here.
Okay.
So I did bin, it was something like this. Then I have structural liquidity here, and then price taps it. Then it now gave me 1 minute MSU. I'll be glad to sell this.
Okay, I understand now.
Because what? This is now efficient.
Okay.
Is it clear?
Yeah, thanks a lot, bro.
You're welcome, bro. Logic. Now, be careful with transactional liquidity, because transactional liquidity can also be inducement liquidity. Because if you look at this, we're looking at here as a next transactional liquidity, but also it turns out to be what? Fake BOS and inducements too. Can you guys see that? However, it was fake BOS and inducement here, but it turned out to fake, and this was seen as transactional liquidity. So be careful about it. What can you do about it? Nothing, but you can always look at this level first as a liquidity level before you start attaching a name to it. So irrespective of it being transactional or inducement, you know that this is a liquidity level and your trade is only going to happen at the follow-up MSU. Does it make sense now, everybody?
Yeah.
Good.
That was my main doubt, because I thought that for us to sell, imagine on the transaction liquidity, we need to have first imagine M5 BOS and then an MSU, but we don't need to have it, right?
Yeah.
You don't need to.
You don't need to what?
Because if we approach transactional liquidity like this, like this,
you know liquidity has been taken, you're looking for a sell opportunity.
Yes, but imagine
so in getting your sell opportunity, all you need is a delivery like this. You need an MSU, an efficiency, all the rules you'll be given to still get into that trade. The purpose of transactional structure and all of this is to show you the cycle in the market, how price tends to move from structural to transactional to inducement to efficiency, and price does this continuously. That is the liquidity cycle. It happens on all time frames. So what we do for intraday trading, we try to identify those levels on the 1 hour time frame or the 4 hour time frame or the 15-minute time frame, depending on how price is at that particular day. If price is not noisy, we use a higher time frame. If price is too noisy on the higher, if price is too noisy on the lower time frame, we use that. What I mean by lower time frame is if price is too noisy on 15 minutes and 1 hour, you use the 4 hours to identify the key liquidity levels, which are nothing but these 4, right? Then if price is less noisy on the lower time frame, then you identify it on that lower time frame. But the most important part of it all is that to deliver the price into those levels, you always use the 5-minute time frame. That is why I told you guys 5 minutes is the most important time frame for intraday trading. And you guys see that liquidity is actually an interesting topic. It's not boring.
Yeah. Yeah.
Yeah, just one more doubt. Sorry.
Yeah, sure. And as many as possible. I'm here for you, bro.
Imagine this. I'm going to draw this circle in here. Okay. Imagine we have the transactional liquidity is there, and we approach it like this. Okay. Imagine this is M5. Okay. And I'm going to do on yellow M1. Imagine this is M1. We didn't break M5, right? But if price went there, I can sell this MSU I can sell?
Yeah, you can sell.
Okay.
Transactional liquidity was taken on the higher time frame,
Okay.
and that caused you to look for a sell opportunity. That sell opportunity is based on the MSU that happens here, or efficient pricing that happens here.
Okay. Okay. Even without the break of structure on M5, you mentioned.
It doesn't. Remember, you don't need break of the structure.
Yes.
We've thrown away break of the structure a long time ago.
Yeah. Okay, bro. Now I understand. That's why
You don't need the break of.
Yeah, I was a little bit confused, bro, about that.
Yeah,
thanks a lot.
Break of the structure keeps you stuck to POI trading.
Yeah.
Hey, Yusuf, I got a question.
Shoot, man, I'm here for you.
So like he was saying, once the transactional liquidity is taken, like you said, you sitting there looking at the 5 minute, looking at either EPA or 5 minute MSU. So either one of those two then allows you to go to the 1 minute and look for an MSU, basically, right? To sell.
Yeah, I would, once I find either of both, then I can now go to the 1 minute to pick my entry based on MSU or efficiency, based on the fractal nature of the education from the beginning. But I have to see it first on the 5 minutes, because I'm delivering the 1 minute into the 5 minutes target and the 5 minutes into the 15 minutes or the 1 hour target.
Yeah.
So I need to set my direction right first from the higher time frame.
Yeah. Okay.
Awesome. Anybody got any other question? Ivan, we good?
That's a really interesting topic, liquidity and liquidity cycle.
Yeah.
Okay, I'm good. When the transaction liquidity is taken out, sometimes we can see the traders to breakout traders, support and resistance. You understand what I mean? Well,
yeah.
But in this
that's
case,
what they are sitting. So their liquidity was taken, and that's why that correction will more than likely happen.
All right.
That's why you see that in most cases, price makes deep retracement because a lot of liquidity was sitting here. So this transaction can't be just shallow.
All right.
So, but sometimes price takes this liquidity and does not make deep retracement. It just keeps going up. The reason for this is that the liquidity it took here supersedes that was here.
Okay.
It's a crazy thing. It's just logical.
Yeah. We need to see closely the price action and react
exactly accordingly. So that's why I said the price action is like a programming language. You need to understand, you need to watch, you need to listen, and then react accordingly. That's why I always encourage you not to trade the whole day. Pick 2 hours, 3 hours, and then trade. Because like I told somebody today, if you are having a discussion with somebody, the person is speaking a language you understand, you will be able to respond, right?
Yeah.
Now you guys are interacting. If you keep interacting for like an hour or two, the conversation will be meaningful. But by the time you start getting to 4 hours, 5 hours, 6 hours, then the conversation becomes not meaningful anymore. Does it make sense now? Everybody gets tired, the love mission sets in. So it's more or less the same thing with the markets. You're interacting with one another because our trading style requires you to actually watch price candle by candle because you understand what every candle formation is actually talking about. So how long do you want to do that? When you can do this efficiently for an hour or 2 or 3 hours daily, and then you make good percentage of your account and you're done for the day. Does it make sense?
Yeah, bro.
Yeah. Good. And it doesn't restrict you to any timing. It could be Asia, could be New York, could be London, any timing at all. Everything still revolves around the same liquidity cycle. It is around that same concept that people begin to build the concept of time and price, whatever. But at the end of the day, this is superior to it. They're just taking a fraction of it and say, oh, within this time, this happens. I'm telling you, within those time, if there is no MSU, that trade will never happen. If there is no liquidity graph, that trade will never happen within those time. So, oh, it happened today, but it didn't happen tomorrow. Oh, that's what you find there. Is everything clear?
Yeah, bro.
Awesome. Yeah. Awesome. Wang, is it clear?
Yeah.
Awesome. Good. So let's look at this pretty little guy, and then we'll take a break. Then we'll continue with Algo market structure, shall we? For now, take a screenshot if you need to, as I will be clearing the screen. Oof.
Yusuf, one question.
Ask.
What do you think about the box of the Asian session? Is liquidity or no?
You want my honest opinion? The answer is no. Asian range has nothing to do with liquidity or not. If you've been in the community for a while, have you seen anybody mention Asian range, whatever?
No, I never saw.
Yeah.
I was looking for, but I never saw.
Asian range has nothing to do with liquidity or no liquidity or whatever. This is all what liquidity is. This is what builds Asian range. The reason why you see Asian range is slow sometimes is because of the volume being traded in the session. Do you understand?
Okay, thank you. Thank you for the answer.
You're welcome. You're welcome, brother. You're welcome. Mm-hmm. So premium discounts and equilibrium pricing. Now we know that in economics, there's something called the demand curve, right? And in that demand curve, you have the sell curve, now you have equilibrium, you have premium. I can hear myself. And you have discount. Now, applying this to the market, a number of people apply it as such. It'd be like in a downtrend, for example, you have lower low, lower high, lower low, right? And when you have this, especially smart money concepts, they tell you what there is that from this low, so from that high to this low, then equilibrium here. You say here is premium. You say here is equilibrium. And here is what?
Discount.
And then as a rule of thumb, they'll be like, never sell from discount because you sell when the price is high and then you buy when the price is low, right? So you say never sell from premium and never sell from discount and never buy from what? Premium. So you only buy from discount and then you sell from premium. So what? They are expecting price to come into premium before they can sell. Right? Expectations. So that's the rule. Oh, I'm not going to sell that trade except it comes to premium. Well, can you count how many times price turned at discount in the market? Can you count it, everybody?
Many times.
You see why
it happens?
Yeah. Now you see why you have to keep waiting for your POI to be hit, and it might not happen in a week, and you're frustrated. You pick the wrong trade because you're waiting for premium.
Waited a week.
I remember somebody was like, "Yusuf, what can you do for me, man? I don't want to keep waiting for a week for my setup to be met, and then the moment price comes into my POI, I'm in the toilet." I thought I'm out of the toilet, the trade is gone. I have to keep waiting again. So, can you count how many times price comes and fucks up your premium and then drops?
A lot.
A lot. Does price comes to premium and drop? Yes, it does. Right? But that is not objective. And the same thing applies to what? Discount. So we don't consider premium or discount in our trading. Because the way we trade, we are moving like the algo in the market. So if the market is going to go to discount and drop, we're actually moving together to that discount and we are dropping together. If the market is going to go to premium and drop, we're actually going to the premium together and we're dropping together. If the market is going to go to equilibrium and drop, the same thing, we're going together, living together. And if the market is going to fuck up your premium or fuck up your discount, it doesn't matter to us because we are the one fucking you up. Does it make sense now?
Yeah.
Yeah. Okay. So if you look at it logically, as an algo trader, based on what you guys have learned so far, you would tell that, oh, looking at this market, your next possible level is here to get. And you'd be like, no. You pack a bunch of smart money traders. You'd be like, no. I'm not selling that trade until it takes here. And smart money trader will be like, no. I'm going to sell it here. No, this is premium. And then he does this. And the person will be like, how did you know? What happened? What did you say? So, oh, nothing. I just waited for price to come to this level. Then after I did BOS, then I sold. Oh, so it was still BOS. Yes, it was BOS. Just leave me the trouble away, please. So that's how it works, man. I remember there was this time I was getting a lot of questions on my DM. Somebody was asking me, why did you sell there? That day I was in the mood. I was in the mood for fun. So to catch cruise, I was like, well, I felt like selling, I sold, and then the market sold. Oh, really? Yes, really. Try it. Okay. Now, the only thing that is important amongst all of this is equilibrium pricing. Because nobody hates to be cheated. That's the purpose of transactions. So you can gain value as the seller, and I gain value as the buyer. So equilibrium pricing is the only thing important there. And you see, the good thing about equilibrium pricing is the first thing that is going to introduce you to what is called transfer of money. Now, what is equilibrium pricing? If you pull out your Fibonacci, okay, 50% of that level, obviously like demand and supply, 50% is equilibrium, right? So if you pull out your Fibonacci, for example, in an uptrend, you have higher high, higher low, higher high. The entire sell to buy range price is said to have achieved equilibrium when it taps at least 50% of the entire sell to buy range. Not when it has achieved efficiency. Efficiency is different from equilibrium. Now, efficiency means that price is efficient. It doesn't mean that there is still no money in this demand level. But when price taps equilibrium, it's possible that what it means is that whatever conflicts here, everybody has agreed to it. So there's a huge possibility that when price visits this demand level, again, in the future, it is more than likely going to take it out. Everybody, please pay close attention. Because the money here has been agreed upon, so there is more or less no more money here. That is why you would notice sometimes on charts, which happened yesterday, happens every day, you see price does something like this, taps equilibrium or more, goes higher, taps efficiency, goes higher, comes and induces your efficiency, then goes higher. Then the next time it is coming down, you think it is going to induce this low, but it takes out the whole thing, taps structural liquidity, and then continues higher. Why? Because this already tapped into equilibrium. So there was a huge possibility that there was no money here. There was no money here. So just that this is the structural liquidity, and it grabs everything and continues again. Can you guys see why I said it introduces you to transfer of money, telling you how money is being transferred in the market?
Yeah.
It's a crazy logic, right?
Yeah.
Yeah, crazy. Jeez.
So this is the reason why when you want to pick entries, you look closely at that zone of your supply or demand, looking at how the 1 minute delivered. If I, for example, I have identified supply, price taps right into my supply, then price does something like this. Okay, like, wait, this is a, am I correct? But is it at equilibrium? No, it is not. There is a huge possibility that the mitigation will be at the 50% of this equilibrium here.
Okay.
Okay.
Jamis, I believe you understand what this is for now. Because I saw your post and you're like, perhaps I'll tell you to unlearn it, but no, you don't have to unlearn it. You just need to know how useful it can be.
All right.
Okay, so I know there is money here, but I also know that there is money above it because it hasn't smashed equilibrium. So I want to be careful with picking this, even if it is efficient. So for me to, that's why for you to pick this, you must always wait for what? MSU. You must always wait for liquidity to be created for price to deliver. Well, this is the foundation to transfer of money, and that's equilibrium, and that is all about that. I will touch more on transfer of money, and you'll be amazed at what we will learn in the future. Oof. Let me share my screen and show you guys a typical example from yesterday. Now, you all see my screen here?
Yeah.
Yeah.
Now, if you look at this, can you see what happened here? Price came into this level. Let me draw something. You see, price came here. Did it tap equilibrium?
No.
Did it tap equilibrium?
Yeah.
Yeah, so there's technically no more money here. Did it tap equilibrium? No. There's possibly money here. Do we have a buy to sell here? Yes. Is it efficient? Yes. But then when it induced it, it went right into equilibrium and drops. That was yesterday. Now, let's follow all of this that happened here. Going bullish. You have this entire buy to sell range. Okay, sorry. You have this entire buy to sell range. Now, fortunately, in this case, the price comes to equilibrium. Yes, it did, isn't it?
Yeah.
Mm-hmm. Yeah.
Good. Now, what about this? You know, Aisha, I'm in class. I'm at work. I'll call you back. Now, if you look at this closely, the price tap equilibrium. No, right?
Yeah.
Let me zoom out. Just watch. The price tap equilibrium, yes or no?
Yes.
Good. Now, first thing first, let me do this. study price. The last high, this is the last low, right? After the whole higher high, higher low, right? Higher high, then higher low.
Yeah.
Then we had higher high here, then higher low. Am I correct?
Yeah.
Yeah.
Good. Now, this push on the higher time frame is one, making those higher highs and higher lows. Now, look at this here. Below this, there is still money because equilibrium has not been tapped, which means I should be careful for picking trades on this efficiency here. Can you see that?
Yeah.
I'm telling you guys at the first set I'm teaching this, I was always saying, I won't teach it, but here I am. Going in depth. Now, when price comes here, I have to be careful because there is money here. When price came here, did it react or not?
Yeah.
Can you see the equilibrium here? The price reacts or not? Smash this guy completely because there was still money below it. This one, it didn't come here straight up because of what? This has been tapped. But it needed to continue price lower based on the fact that it took a higher time frame liquidity here. So what did he do what did he have to do to get that? It grabbed the structural liquidity. Can you see that? Then it took that into this level and then dropped. So you can see how you can analyze and have, I know you had confidence in this before, but you can see how this can give you crazy confidence.
Yeah.
You can tell, particularly you can pinpoint where the money is in the market.
My head's about to explode. Jeez. That's crazy.
Man,
So once the liquidity cycle has been set, you've identified those liquidity levels you want to pick your trade from, you can pinpoint how the money is being transferred within that liquidity level, and then you can pick that trade with confidence.
damn.
Yeah.
Jeez.
This was yesterday, not cherry picking anything. If you look at this here, just take a look. You see, price got right here. If I'm not mistaken, there you go, right at the equilibrium. You see that? So there's a huge possibility money is not in any of this again. Remember what you said about higher time frame, and that's what gave this free fall. But even in between, you can tell if there is still money or not, if there's still money or not, if there's still money or not in between. And you just try to manage your trade. But don't stress it too much. Just work it around your key liquidity levels. So you don't just monitor too much. Monitor it around key liquidity levels, pinpoint it, catch the trade. You know which one is more close to being safe, more than 80% safe, and the one that is not. Catch the good wins, catch the good loss, and then be happy with yourself. Transfer of money.
That's why Group A was like, man, they got done with you the other day after the liquidity thing, and they were just blowing the Discord up. Man, they was pumped. I get it. I get it.
Yeah, man. So let's take a short break before we jump into Algo market structure. Okay.
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 We're supposed to end this session by in the next 1 hour, right? So in the next 1 hour, we still have approximately 2 hours, or 1 hour, 15 minutes thereabouts. Or let me just say 1 hour, sorry, we still have like 1 hour, 40 minutes. Am I correct?
Yeah.
Bro.
Good. So let's take a 30 minutes break. 1 hour, 10 minutes is enough for us to tackle our market structure actually.
Okay.
Right.
Yeah.
Okay. All right. So see you guys in 30 minutes. So that will be by 2:50.